Hello and welcome to another interview in the Time for Advice Digital Transformation video series. Over the course of this series, we'll be interviewing industry figures to see what they understand by digital transformation and how they see it impacting financial advice and wealth management businesses. Our guests will include industry pundits and practitioners. All will have their own views, and we hope that you'll find them both interesting and informative. As a provider of technology solutions to financial advisors, we've no doubt about the value digital transformation can deliver a business, not only in increased profits, but also in long-term sustainability. Too few people have access to professional advice, simply because the current model is overly expensive due to disconnected systems and multiple manual workarounds, which diverts time away from client relationship management onto mundane tasks like review report writing that clients simply don't value. At Time for Advice, we want to change all of that. We're already hearing from clients that are well on their way to digitally transforming their businesses. One of our clients recently announced that his firm is servicing some 2,500 clients per advisor. That's 10 times the average. It's important to remember that digital transformation is a journey, and all firms will be at different stages of that journey, some well advanced, others just starting. There's no doubt that it's challenging, but we believe that firms need to think big, start small, but just start. Today, I'm really happy to welcome Paul Miles, owner of Silverback Consultancy, to share his views about digital transformation and what he believes it means for the financial services industry. Welcome, Paul.
Hi, Roland. Great to see you.
Great to see you too. Firstly, just to sort of set the scene, tell us a little bit about your background. Where have you come from? Why are you here?
Well, as you always say, I'm called the granddad of the industry. So I started back in '74, so 46 years ago, in a product provider. And I think a lot of us started in that, so it was a good training ground for me. And then I set up my own financial advisor business in the 1980s, late 1980s, which I ran for over 20 years. And then I sold that business. After that, I helped with business development for the platform space, fund supermarkets, platforms, wraps in the DFM. And then in 2015, I had my first granddaughter, which was a memorable moment, and decided to set up and go self-employed and set up Silverback Consultancy. And I help firms to become more profitable and efficient through the use and change of technology, as well as helping them to grow their business by restructuring. And I do a lot around that, and then perhaps become an advisor to the board to help them to transition. I really enjoy it. I work as hard as I've ever worked now, which wasn't really the plan. But it's not work, I'm not digging holes, and I'm doing something that I really enjoy, and I'm helping to change people's lives and businesses. What could be better than that?
And that's really important, isn't it? That sort of sense of achievement that you achieve by getting a job well done, really. So you've seen a lot in your experience in this industry, and critically, things are moving forward apace now with the new technologies that are emerging, and that's really exciting, but also quite scary, I think, for a number of businesses. So to sort of set the scene in terms of what digital transformation might mean, what's your understanding of digital transformation, and why is it so important?
Okay, so I can tell you what isn't digital transformation to start with, which is where businesses have been digitalised, because we've been doing that for, say, 40 or 50 years now, I guess. And it was efficient to move from paper to being digital. We've not quite got all the way there, but it was always built around the business rather than the client. So it was trying to make the business more efficient, and out of that came the client outcome. And I think that's one of the fundamental differences between this. So digital transformation to me, in simple terms for me, and it has to be, is using the technology to drive new business processes and better client outcomes. And you start from the client rather than starting from the business. So you start from the client and you work backwards out of that. And that's the big difference. Now, people are expecting different client experiences to what we had previously. And I think you've seen that really even during the period of the pandemic, haven't you? That technology, we're all getting used to more and more technology, and people are expecting different experiences. And that's what digital transformation can do. So we've been a bit behind the curve, I think, to some other industries, but it is coming our way, and we've got to get on board with this, and it will transform the way in which we do business with clients.
I think you're absolutely right. People's expectations have changed radically, even in the last 10 years, 15 years. Obviously, things like iPhones and iPods have fundamentally changed the relationship people have with technology. Everybody uses it, and one of the biggest uptakes, I suppose, of this sort of technology were what they were classified as the silver surfers. Those people who were, I guess, 50 and above, who really had the time but really relished these tools because it put them in touch with their grandchildren, for example, where that might not have been easy or accessible before. So, there's been an absolute transformation in terms of how people engage with technology, but also, I suppose, on a day-to-day with the likes of the online shops like Amazon and Apple and all of the immediacy that brings with it. It's sort of reset people's expectations, hasn't it? And so I guess one of the obvious challenges then for IFAs who are still working and I guess rooted in the old way of doing business, which we'll come on to in a few seconds, is how they sort of address that challenge. I mean, there's been a lot of discussion around intergenerational wealth, where there is between 3 and 4 trillion pounds expected to flow through the generations over the course of the next number of years. But that's set against a backdrop of surveys which were done recently, which suggested that 67% of the children of parents that use advisors are going to sack their advisor. And that's interesting because it suggests to me that the new generation, the younger generation who are used to using these technologies, aren't happy with perhaps the way services are being delivered to their parents. I don't know, what's your view on that?
Well, I think that's interesting, and there's a lot of people talking about intergenerational wealth, and I think one of the key things, or several key things actually, but one of them is to engage with the whole family as a unit, a whole household, all the generations. And when people talk about intergenerational wealth, it's quite interesting in terms of the age group they think about immediately when you say that, because I'm 62 years old and I haven't inherited yet, and I've got grandchildren, and they're growing up quickly. So, what is going to be the future and way in which we engage with people? And I think you're right. We've got to take on board what's happening now. My mother's got an Amazon account, so she's buying things almost every day. So maybe I'll end up with no inheritance because of Amazon, but who cares anyway? But I think it's important. I think, in terms of the advisor market, it seems to me the sensible solution going forward will be having some sort of hybrid solution where you engage the whole business. And that's really what digital transformation is going to allow people to do, is to understand and deliver what the client wants and what different types of client want and what at different times that the client wants it.
So what you're talking about here is the business or the client propositions that the financial advisor is or needs to put in place, but also beginning to ask the client about what or how they want to consume that service. So understanding what service they want, what service they value, and how then they're going to consume those services. Do you see that as something advisors are grasping? Are they getting the importance of that? And if so, what are they doing about it? And if not, what do they need to do about it?
I think some advisors are going that way, and there's a big percentage of that now has changed, I think, in recent times, which is great to see. But I think there's still far too many people living in, if you like, in the dark ages of all this. And one of the things that was disturbing for me really was to see the transition from 50 basis points to 100 basis points for their part of the proposition charge. And I know it's now about pricing, Roman, because you talk about the value of the proposition, and that, you're absolutely right. But I do think there is pressure on price. I think the overall industry acceptable number of 200 basis points is just too high. And I know it's coming down in certain areas, but it's been coming down for even the wrong reasons. So some people have been moving to passive, perhaps from active, and not actually doing it for the right reason, other than the fact it brings their overall proposition down. But is it the right thing for the client? That's what you've always got to consider. Is it the right thing for the client? If you do it for the right thing for the client, you'll be fine, won't you? We're seeing a move now to fixed fees, which is interesting as well. And I know businesses that have completely gone that way. I also know businesses that have been in existence, financial advisor business, since early 1990s charging fixed fees. So again, it's not anything new. It's just not been adopted by the whole industry. And I think there's a lot of pressure on the fund management charges, so that's part of the proposition. Yeah. And one of the things that I came across recently was I knew that Vanguard were offering advice in the States at a very competitive rate, but I'd learned that the rate is actually 30 basis points. Yeah. When I say 30 basis points, I'm talking about the technology, the platform, the fund manager, and the advisor fee. Yeah. Now, Vanguard will offer advice in the UK at some stage. I'm sure it's not going to be too far away. Now, I'm not saying they're going to come here for 30 basis points, because that's probably too low here, because our cost of regulation is much higher than it is there. But I bet it will be sub 100 basis points.
I think that represents a real challenge, because in my introduction you heard me talking about the technology that's in common use, and it was highlighted absolutely by the Lang-Cat, Mark Polson's research that he did with Origo, talking about the disconnected world that the advisors are having to contend with. And that means there's built-in inefficiency, and that equals cost. And if you think that of the 40 or so million people that need financial advice, probably only 4 million take advice regularly from a financial advisor, what does the industry need to do in order to increase the ability to service more people? And it sort of really comes right back to the next question that I want to ask you about, and that's the current advisor technology market. So you see a lot of firms, and you probably see the technology that they use. What's your view about the advisor technology that exists today?
It'd be easy for me to say poor, but that's probably not the right answer. I think it's very mixed, and this is one of the frustrations I think that people have. And it's, if I say to a firm, you're going places, it's growth, you're getting all things in order, and you're 2020, and yet at the centre of your business, you've got some technology which is 20 years old. How can that be right? I think, I always say to them, well, in 2000 you had a Nokia phone, 2020 you have an iPhone 12. Is there any difference between those two items? Probably. We know that technology moves at one hell of a pace, don't we? And some of these businesses, okay, they've adapted their Nokia phone and they've added bits and pieces to it. But I sense frustration when I talk to firms, because they have got the technology, they want the technology, but it's not joined up, right? And that's one of the problems. And I think also that causes, a topical subject, which is data. Where is their data? And when you see businesses, their data is not in one place. It's all over the business in different formats, whether it's SurveyMonkey, whether it's Excel spreadsheets, it is all over the place. So it's not in one place. So if you've got to think about, can you, one, get your data accurate, get it in one place, and have true integrations with other technology. And you've got to get to that place, because you won't be able to report accurately to clients, you won't be able to report accurately inside the business, which must be frustrating because you haven't got a pulse on the business.
And I think that's a really important point, because the Nokia example is an example very similar to the one that I use, which is most of the systems in common use today were available when people were walking around using Blackberries and listening to iPod. And if you just think about how rapidly and how fundamentally technology has changed, not only in computing, but in cars, in aviation, in every sphere of life, yet somehow IFA seem to have been left behind, where they're trying to digitally transform their business on technology that simply won't allow it. And that's, I think, a really important challenge, and I think something that obviously firms need to wake up and address, because, there's no point relying on the providers to change. They won't. There's no incentive for them to. And to do nothing, to stay the same, is, well, nothing's going to change. In fact, everything changes. You go backwards until eventually one day you wake up and you're a bit like one of these old high street stores, which has been completely removed, their relevance removed by the new technology-driven businesses that are transforming the way people operate on a day-by-day. So more broadly, sort of talking about financial services, financial advisors, their clients, etc., what do you think are the biggest challenges that they're currently facing? What do you think are the main things that should keep advisors awake at night, that they have to address in order to build those long-term sustainable businesses?
Yeah, that's one of the questions I ask most of the firms that I see anyway, or if not all of the firms. And unfortunately, Roland, since we've had the Financial Services Act in 86, 87, one of the problems that people always have said, and it's pretty high up on the list all the time, is regulation, isn't it? And things that come out of that are the FSCS levies, and there's been some horrendous stories about that, but people are complaining about that, but they're not going away. And if anything, they might well be increasing. So what we've got to do as an industry, we've got to find an answer to that. And I haven't got the answer, but we've got to, between us, somehow we've got to come up with an answer for that. We've got the DB transfer situation, should I say, in the industry. Not sure where that's going. Potential complete review of everybody's case. And so that is going to be difficult for the industry. And of course, the consequence of that is the PI cover that people have got. And there are people that have got business that are not covered for PI cover. A lot of businesses stop doing DB transfers now. Is that the right thing? Is it easy for a client that you've been dealing with for years that comes to you and say, I've got this transfer value, what should I do with it? And you can't give them an answer. But beyond that, one of the things is technology. And, certainly since I've set up Silverback Consultancy, if I ask them, a firm, what is one of their challenges, it will be technology. And for the frustrations that we've talked about. And so they're reviewing their technology. They're not necessarily have made decisions about that, but they've been reviewing it and kicking it down the road. But I think since the pandemic kicked in on March 23rd, chaos to start with, but actually as an industry, we adapted quite quickly online, yes, didn't we? And after that, people have said, well, actually, what are those big projects that we've been kicking down the road that are technology associated, because we need to move with this now. And, people talk about we've gone 7 years and 7 months now. And if that's the case, we need to think about what it would be like if it was 7 years' time now. So people are starting to seriously review their technology. That is a key issue for people, because we all talk about it, and there's all people come and do presentations, and all technology looks great. I mean, when you do demos of technology, it looks fantastic. You're no exception, of course. So I think that is fundamental. I think it's the right time to be doing it now. And we're talking about digital transformation being different to where we've been to before. And if that's the case, you've got to look at your systems, and you've got to start at the centre. Yeah. And that means looking at your back office, probably. It's not a CRM, probably. You want a CRM going forward, what's available to you in the marketplace, and then think about where you want to be in 3 years' time.
And I think that's the point, isn't it? It's looking forward to try to visualize the business that you are then, not today, tomorrow, and what you need to do in order to achieve that vision. It isn't too difficult to visualize a world where you have that single truth, where you have business process automation that removes some of the mundane tasks that we referred to earlier, where you've got consistent outputs in terms of your client reporting, which is generated on demand or automatically by the system, where the system is giving you nudges and insights based on that single truth that you referred to earlier, and where in future, and it's not that far away, things like artificial intelligence and machine learning can be deployed on that single truth to alert you to certain actions that need to be taken in order to do this, that, or the other. So where the system effectively comes alive. And honestly, there's no way that's ever going to happen if firms maintain their commitment to technologies that were built 20 odd years ago. It just can't happen. Absolutely. And unless these firms actually take positive action as you've been describing, 3 years will go just like that, and they'll still be in the same place.
Well, Roland, there's a firm I know, not too far from here actually, who have they've really gone by it. They've sat down and thought, well, where are we going with this? And during the pandemic, they've changed their back office system. They've changed their platform solutions, so they're re-platforming, and they've also changed their centralised investment proposition and driven that by technology in future. And there are 3 core elements in the business, and they've done it during the pandemic, so they're not sitting back. Yeah. So people, that say, okay, well, when this pandemic's over, the pandemic's not going to end. It's it's a big threat for us. Well, it's a big threat for everybody, isn't it? Not just the industry, but it's not the only pandemic we're going to have, Roland. This is not going away anytime soon, and we might have a much worse pandemic. I don't know if you watch The Walking Dead, but we might well be The Walking Dead. I'll be Rick, and you can be Daryl.
God, perish the thought. No, I haven't. I don't know what you're talking about. I think I did say 28 days later once. But look, before we go completely off track, and I do get what you're saying, and you're absolutely right. We need to take all of that into consideration and prepare. Because one of the clients that signed up for Time for Advice recently, their COO, Stuart Payne, in fact, Wills and Trusts in Tame, said that had they not moved to Cura when they did, they would have been out of business as a result of what happened. And that's extraordinary, especially given that they've grown significantly over the last year or so. But before we finish, obviously I just want to sort of ask something which I know is very close to your heart, and whether this is impacted as well by what we've been talking about. You are a trustee of a mental health charity, and my assumption or my feeling is that charities tend to be quite old school. Is digital transformation likely to impact what you do, or is it impacting what you do?
It is in this time, and we are in the you would say we're in the right place at the right time because we're a mental health charity. So we've had to adapt during this period quite dramatically. So we've changed our direction, if you like, because you need to be like that. You're right about charities in general. We have only been going 6 years, so we're quite a young charity. We've got turnover just over £500,000 now, so it is a business, and we have technology in it. But we've decided to give a complete review to our technology, and with a view of digital transformation. We need to look at how we communicate with our volunteers. We need to know how we're communicating to our corporates. We need to do that at the right time, and so on and so forth. So we're looking at all our systems, doing a complete review. And we're a little charity in Buckinghamshire. We're doing some great things, but digital transformation is something we're talking about.
Fantastic. Well, there it is. Digital transformation means different things to different people. Paul, thank you very much for spending the time with me today. I found that really interesting, and I appreciate you sharing your thoughts and your insights. That's been really great. Thank you.
Absolute pleasure to see you, Roland.
Great to see you too.